Last week's jobs data came as a shock for many economists who had forecasted lackluster results for January. Non-farm jobs increased 517,000 in January compared to the anticipated 185,000, a welcomed 179% discrepancy. Total non-farm job openings are described by the BLS as a measure of all jobs that are not filled on the last business day of the month. A job is considered open if a specific position exists and there is work available for it. The job can be started within 30 days and there is active recruiting for the position. The openings increase is the highest it's been since July last year. The increase also significant on a month-over-month comparison as 294,000 more jobs were added from December to January. In addition, non-farm jobs beat out last January's figures by 13,000 in a market last year that was much less consumed with recessionary fears. The biggest gain was in leisure and hospitality in preparation for the upcoming 2023 vacation season. While leisure and hospitality point more towards the service than the goods part of the economy, the growth is still a positive sign for the movement of goods in order to support consumer demand. Additional positive BLS data releases include unemployment dropping 3.4%, its lowest level since May 1969. Average hourly earnings also increased by 0.3% in January and is up 4.4% year over year. The labor force participation rate increased to 62.4% in January. That marks its highest point since March of 22, which was also at 62.4%. That's only 0.9% below February 2020, right before the pandemic-induced recession. The participation rate a key focus in the Fed's war against inflation, as a loosening labor market could take pressure off an increase in wage demand and ultimately boost deflationary efforts. The outbound tender volume index, or OTV, is an index that measures loads being electronically tendered. OTV is a good indicator of truckload demand in the contract market, which represents most of the van, reefer, and flatbed moves across all 135 U.S. markets. The current one-year comparison puts OTV down roughly 31%, though still slightly above both 19 and 20 figures. Historically speaking, March typically brings an increase in tender volumes as seasonal shippers start to ramp up production. With rejection rates, or the amount of freight being turned down from shippers by contracted carriers, at its lowest level on record, excluding early pandemic data, could we see a rate floor emerge over the next couple of weeks? Will Strong's jobs data persist long enough for consumer confidence to improve and keep recessionary fears at bay? One thing data has proven time and time again is that an employed consumer spends money. So keeping downward pressure on claims and inflation will be a must if we are to see an increase in overall freight volumes as we move deeper into Q1. This has been your Bridge Logistics Market Update for the week of February 6, 2023.